Hi everyone, my name is Alex. I'm real estate broker here from EXP, and my today's guest is every week. He's Mahendra Rohan, a man who is in Primerica Life Insurance Company, covering not only insurances but also financial advisor. Who will today discuss a little bit about one very important topic, because last time we discussed about some main pain points he's facing on the daily basis with his clients. Today we will discuss about a difference between mortgage insurance and life insurance. So Mahendra, how are you today?
Awesome. Awesome, Alex. Thanks again for inviting me to this podcast. Can't wait to
You're
share
welcome.
some really good stuff.
Thank you. I'm really exciting to see what you will share today with us. And that even brings me more curious to see what you can share today with us. Let's go.
Absolutely. Absolutely. Alex, thanks again. And I just wanted to preface this by saying this presentation here today is meant to educate families on money, right? And one of the
Yes.
pain points with Canadians is helping people to understand their needs when it comes to insurance coverage, and how do you know what you have is the right product? How do you know what you have is the right plan? And you know what? Since we were founded in Canada in 1986, we have shown, Primerica has shown families how to protect themselves with affordable term life insurance instead of more expensive cash value mortgage life insurance, and how to actually invest the savings that we generate for you. We call our philosophy buy term and invest the difference, and it has given countless Main Street families the ability to build towards and achieving their financial independence. So we've always believed in this concept. We've always believed that we do what's right, and consumer advocates and financial affair writers agree. In my opinion, there is only one kind of life insurance, and which makes sense for the vast majority of Canadians. So, can't wait to actually share some of these insights. So, Alex, if I may ask you before we get started, um, do you think most Canadians are prepared financially? That's my first question. And do you think most people have a plan for financial freedom?
This is a really good question, Mahendra. One answer is very simple. Absolutely, people are not prepared, neither in Canada nor in any other country in the world. Uh, by every crisis by crisis, as we have in 2008, 2009,
Right.
richer become richer, poor become poorer, and middle class
Yeah. Yeah.
disappeared, right? So
Yeah.
we are
Yeah.
going more and more to extremes,
Yeah.
and
Yeah.
I recognize that as many reasons we have for that. Lack of financial education, reduce your confidence,
Right.
increase your fear, and even some obvious opportunities which are in front of
Right.
your nose, you're running away from there because
Right.
it's not question you're not a risk taker. Risk
Mhm.
taker is connected with your knowledge as well. But with the lack
Absolutely.
of knowledge, you cannot have proper judgment, and result is no taking
Yeah.
action, right?
Yeah. Yeah.
So yeah, your answer to
Absolutely.
your question is yes, people are not prepared. They don't have a business plan, financial plan, and that results with a huge frustration. And I am pretty sure today people are even more frustrated than yesterday, knowing the fact that mortgage rates by Bank of Canada are again increased for 50 business points, right?
Business points. Right. That, that I was just going to ask you your thoughts on that, because it is so pressing, and we're doing the seminar today. December 7th happens to be the day that that great event took place. And how do you think that is affecting people? Guys, I sat with a client this week. We were able to figure out a certain part of their budget. I think it was about $324 a month that was going towards mortgage life insurance. And the
Mm-hmm.
bank actually included that payment within the mortgage. So the fact that she already has enough life insurance to cover her mortgage with us, we were able to cancel that mortgage insurance and save her about $324 a month. which, by the way, her payments, because of the recent increases, her mortgage payments went up about $400. So
Oh,
quite think about it. We figured that out. She didn't realize she was paying for this product within her mortgage. Now that savings, that $324 is going towards the increase in mortgage payment, which is really, really, really important, right?
absolutely.
Yeah.
Absolutely.
Uh,
Especially these days, with limited income and lost jobs,
absolutely.
the situation will be
Absolutely.
very tight.
Hmm.
And
Hmm.
in regards to real estate, I am pretty, people are already sitting on the fence. So neither
Yeah.
sellers are willing to sell. Only people who have
Right.
to sell, they're selling. People who would like to buy, they're sitting and waiting
Right.
what's going on with the
Right.
prices, and they are looking prices will decrease.
Correct.
Definitely with this mortgage increase, prices will decrease. On what
Absolutely.
level, nobody knows yet,
Absolutely.
right?
Absolutely. Absolutely. Great
But here
points.
we
Great
are, but
points.
again, we are here today to help only one of many topics we can to address.
Yes.
And we are looking forward to get as many as possible questions, right?
Okay, great, great. So Alex, what I'll do, we'll take a deep dive right into the last podcast we did. It actually we just touched on a bit of overview.
Yes,
Today we're going to talk about the details of mortgage insurance versus actual term life insurance, which I feel is the best way to go. So I have a small presentation to share about the basics of life insurance and mortgage insurance, and then we're going to get into some frequently asked questions. Is that okay?
excellent, excellent.
Okay,
I'm
awesome.
looking
So
forward to hear that.
let's do that. Let's do that. So guys, I'll just share. I just want to make sure you can see my screen.
Yes,
Okay, good, good,
excellent.
good. All right. So with what I'm about to show you, Alex, we have over 130,000 licensed representatives in our company. That's including yourself that actually does what I'm about to show you, with over 2,500 home office staff that actually work in the background, which is really huge, right?
Yes,
And I feel as a testament to what we do every day, if you look at my screen, you'll see all the companies that actually came up, they actually recognize us. These are great accolades in business, Fortune Magazine, Dalbar Award, Moody's, AM Best. These companies are huge, huge companies, and they rate us among one of the most trustworthy firms in all of North America. Bit Investor Business Daily actually rated us for what we do. They rate us the most trusted life insurance company in North America. Just pretty
yes,
huge. So I love that. I love that, and it gives me more confidence to go out there and help people. And we touched on this briefly the last time, Alex. Yes, mortgage insurance is a product, life insurance is a product. But what I'm focusing on is helping people not just with a product, but helping you with a plan, a financial needs analysis, which we call a financial GPS. It takes you from point A to point B. And this, I mentioned in our last podcast, it's a complementary item that I provide for my clients. So
great.
the average market rate on this is about $1,800. If you were to go to Bay Street or Wall Street to get a proper financial needs analysis, it's in the range of, actually, it starts for around $1,800. And the financial needs analysis you get in the marketplace, it does not teach you how to get out of debt. It only talks about investments and life insurance. Okay.
I see.
So that is that. Now, at the end of the day, why life insurance? Why should we actually address this as a pressing concern? In life, they say there are either two things that would happen. You would either die too soon or you would live too long.
Mm-hmm.
Now, a lot of people will giggle and say, well, if I die too soon, what happens? Well, think about it. If you're a young family, there's children, there's high debt, there's a mortgage in most cases in a typical household. Don't you want your family to be protected? God forbid you're not here tomorrow. Absolutely, right? But what if you live
Yeah,
too long? What if you end up having a situation where you have more month than money, where you live to 85, but you run out of money at 75? And
I
sometimes it's
see.
much sooner than that. This is the predicament that a lot of retirees face, where over 50% of retirees cannot afford to retire. They cannot afford to retire. They go back to work,
Yeah,
right?
we've seen so
And
many of them in Walmart or other stores, right? Grocery stores.
absolutely, absolutely. I see, Alex, it's so sad. I meet a lot of retirees. I know people say, oh, I've been saving with my bank. I've been investing with my bank from the last 30 years. Well, how come you're not financially independent? How come
Yeah.
you're not free? And one thing I noticed
Mm-hmm.
is the type of vehicle. It's like this. Picture this, right? This might seem a bit funny, but imagine your banker is on a Ferrari and
Mm-hmm.
you're sitting on a bicycle and you're traveling to Niagara Falls. I wonder who's
Yes.
gonna get there first, right?
Of course,
So
banker with Ferrari.
so we got to really put things into perspective for people, right? And look at the stats. Look at the stats. 40%. This is not a stat that I created. This is from Canadian Life Insurance Statistics last April, April 2022. They say 40% of Canadians do not own their own policy, their own life insurance. People have coverage at work, people have mortgage insurance, but they don't own their own policy.
I have one question for you when you're talking about this. How it's possible that people in Canada do not own the life insurance? What is the reason? What do you have any reason behind? They are not informed, they are not educated about life insurance, or they don't care? What is your opinion?
So Alex, that's a great question. You know, I've been doing this about 11 years now, and
Hmm.
one of the common, very, very, very common things I find is people think they cannot afford the amount of protection they need.
Hmm.
Is the average protection in the GTA is about $1 million because you get a home in the GTA today, it's about $1 million in mortgage or 800 to a million, right?
Yes, of course.
So if I'm buying $800,000 of coverage or $1 million in coverage, the question is, what do I pay per month? Can I afford that?
Of course.
They see life insurance as a bill because of the cost,
Hmm.
but cost is only an issue in the absence of value, right?
I agree, I
If
agree.
if we're providing enough value for a lower cost, that's a whole different conversation. So when we step into homes, we're able to bridge this gap. We're able to fix this problem where people think it costs too much. And the fewer there's a few people out there that says, well, we never got around to it. We really wanted it, but we never got it wrong. Or very, very few would say, I don't think it was important. I mean, if you're a responsible person, mom or dad, you have children and you have a mortgage, and you look at the need for life insurance, I don't think you're going to refuse having your family protection, right? And in the range of,
Hmm.
experts, according to Investopedia, experts say we need about 10 to 15 times our income in insurance protection.
Yeah, 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 I
So
understand.
this leads into our topic for today, Alex, that if I'm only covering my mortgage, what about my partner? What about my kids? What about their education costs? What about paying off those credit card bills? What about paying off my line of credit or my car loans? Because mortgage insurance pays off the mortgage after we're gone, and that's the end of the policy, right?
Yes, so my wife and my kids will be empty-handed.
Absolutely. And as a matter of fact, I don't have money for funeral.
Oh, yeah, yeah, yeah. It's
Like,
really
let
terrible.
let's say worst case, okay, our partner goes out to find a job, the bills can wait and all that. But how about me? I don't have money for a funeral. My family has nothing. All the cards are racked up. What do I do? There's no life insurance, eh? So there's just mortgage insurance. So the lender is taken care of. But what about my
Hmm.
family? What about my family, right? So this stuff actually gets me. I have to contain my excitement because it gets me really jacked up to go out there and help a lot of people because I know the need is so huge, 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 right? I don't know if you have
So,
any thoughts on that.
so Mahendra, that means if mortgage is paid off and you don't have money to meet your ends, even for your that funeral, next step is that that family is forced to sell property to downsize and to try to meet their ends. Am I right?
Absolutely, Alex. Absolutely. And I mean, you've been competent real estate broker for many, many, many years. You know, in this current market, how fast do you think they get their home up on the MLS? How fast do you think they will get that sold within, you say, 60 days, 90 days?
Yeah. In these
What's
days, even longer, of course.
even longer, right? So if I don't
Yeah.
have that liquid cash to take care of my family, what do I do? Sit around waiting on my home to be sold to come into some money? Think about it, eh? Too much of stress for your family, right? So we need to really address this and look at the four variables, right? The four variables with
Mm-hmm.
insurance is age. Obviously,
Mm-hmm.
we all know that the older you are, the more costly it will be.
Mm-hmm.
Health is very, very important, right? We
Yes.
all try to stay healthy. I meet some young folks that are not healthy, and I meet some older folks that are healthy. So it varies, right?
Of
And
course.
the length of term that you want to hold your policy also affects the cost of your policy and how much you'll buy in terms
Mm-hmm.
of coverage. So if you're looking for insurance today, guys, if you're looking to protect your family, these are the four variables that need to be considered, and we can have a face-to-face, kneecap to kneecap discussion about it. Okay, because I think insurance is something that people actually buy in person. They don't actually do it online or on a 1-800 number. It's a very emotional product, I think, in my
Yes.
mind. Every time, most of the clients that I have accumulated over the last 11 years, it's mostly face to face, right?
Yeah. Yeah,
Mostly
of course.
face to face, right?
Yes.
So do you have any thoughts on that before we go into the actual flaws of mortgage insurance?
I absolutely agree with you. Whatever was mentioned already, absolutely on top of the story. I really don't have anything to add because, you're a real pro here. But I would like to ask you, Mahendra, now we're
Right,
touching this mortgage insurance.
right.
Let's first explain because I'm pretty sure that people will be wondering. Again, we're
Yeah,
talking because lack of information,
right, right,
lack of time to search for information. People are taking information as granted, right?
right,
So
right.
let's clear one statement. Is mortgage insurance mandatory or it's optional?
You
And
know,
when is a moment that you're
right.
taking mortgage insurance? This is, in my opinion, very
Yeah.
important to explain people upfront before we continue with this topic.
Yes, 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 absolutely. A lot of Alex, when we bought our first home in 2009,
Mm-hmm.
my this is all the knowledge I had. I wasn't in financial services, I was an accountant, and I
Mm-hmm.
thought it was mandatory because the bank just have you answer a couple of click, 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 yes, no questions, like 5 or 6 questions. You don't
Yes.
even know what you checked off. You just go, no, no, no. You just want to get it over with, right?
Yes, let's finish. Move on.
Let's get it over with. She take that, put it in your file. That stays in your file, right?
Yeah,
That stays
I
in your
see.
file. Why does
Mm-hmm.
it stay in your file? Because one day you're not going to be here. And
Of
one
course.
day they're going to open that file and look at all those no's that you checked off, that you've never had cholesterol in the last 5 years, you never had diabetes in the last 10, you never had a high blood pressure. But you didn't remember that at one point, back in 6, 7 years ago, you were diagnosed of high cholesterol. You didn't
Mm-hmm.
remember that, but you just checked off no because you didn't think it was important. You just want to get it over with. This is what
Yes.
happens. And a lot of people go through that painful process where they lose a loved one. And here is the lender, here is the insurance company coming up with a bunch of post underwriting questions. They want to find out about your health after you're gone. What a product, right?
Unbelievable. So
So
everything is fine when I'm getting the mortgage insurance, but they will chase that policy when I die.
very simple, and I will come to this in the end, is you're qualified to pay.
Yes, you're right.
You may not be qualified to receive,
Yeah, my God.
right?
Yeah, I understand. I
So,
understand.
in another podcast that we do, I'll share a CBC Marketplace video.
Mm-hmm.
Okay. I'll share the video where you folks can go just look at it, and you look at the big five or major institutions in the country. You look at the some of the stories of people that have gone on media, and I didn't know that existed, Alex. I
Mm-hmm.
didn't know. And as I started looking into this stuff, I realized that we really need to get out there and educate people. An educated consumer is our best ally.
Of
Not a lot
course.
of not a lot of institutions out there can say that because the more educated a client becomes, if you're I wouldn't call the names, but for some institutions, the more educated their client is, the further away they want to keep them. They don't want an educated client. because an
Mm-hmm.
educated client will figure out money 101. They'll figure out the rule of 72. They'll figure out how life works. They'll figure out the 50-30 rule when it comes to paying off your mortgage, the front end loaded debt. They'll figure out fixed and revolving debt. They don't want the client to know all of that stuff,
Of course.
right?
Of course, I agree.
So, so so before I go into the slide, I have a couple other slides to show when it comes to the insurance and a chart to show how it actually decreases and all that. I would like to
Mm-hmm.
just have a brief chat as to what is mortgage insurance, right? So
Yeah,
for
you're right.
someone, so we may have a couple hundred people listening to us right now, and somebody might be a new homeowner and they don't know what is this mortgage insurance. Some people I find mistake CMHC to be mortgage
Yes.
insurance, right?
Yes,
So,
yes, yes.
guys, CMHC, Canada Mortgage Housing Corporation, that is insurance you buy to protect the lender if you're going under 20% with your deposit. Am I right, Alex?
Yes, yes.
That
So what
has
is the
nothing
purpose
to
of,
do,
yeah, what is the purpose then with the mortgage insurance?
right? So
What is the
people,
difference?
so
Sorry.
no, so that very, very important question, lead-in question actually. Um, Mortgage life or creditor insurance, it's a policy sold by mortgage lenders such as banks, private lenders as well, to pay off the mortgage in case of debt, with the policy proceeds going directly to the lender,
Mm-hmm.
as opposed to having actual life insurance where you own an individual policy. It's designed to provide the coverage amount and terms for the period of time you need it the most, right? And the policy proceeds go directly to your beneficiary,
Mm-hmm. I
right?
see.
Right. So that is the key difference there to just get it started. And you know what? And Alex, you know this, and buying a home or a condo, I mean, a house or a condo in the GTA, a lot of effort has gone into finding the right home, obtaining the best mortgage, so people want to ensure that their investment, their most valuable asset, is protected in the event of
Yeah, of course.
unforeseen circumstances, right?
Yeah.
So doesn't it make sense that if you're going to look at protecting your most valued asset, well, other than your income is your most valued asset, but I'm speaking as a tangible aspect right now, your home,
Mm-hmm.
doesn't it make sense to have the right type of protection in place?
Absolutely.
Right?
Absolutely. 100% agree. I have one
Absolutely.
question because now I'm thinking about one thing you mentioned. This misunderstanding about CMHC 20% down payment, more
Right.
or less.
Right.
Does it mean if you have more than 20% down payment, you're not paying CMHC, will you still be offered mortgage insurance from the bank?
In most cases, I've seen everybody who's taken a mortgage at the bank level, they've been offered a mortgage insurance because of various reasons I wouldn't get into on this podcast. However, it's always been offered in a lot of cases where the customer is naive. It's not just an offer, it is like, okay, you got to sign here, sign here, sign here, sign here. The
It's a
client
part of
doesn't know
package, yeah.
anything.
Mm-hmm.
Right. And you trust your bank. You
Mm-hmm.
trust your the person getting you the mortgage is probably the most important person to you right now if you're buying a house, right?
Of course.
So you trust that person, all right? And nothing, hey, a lot of folks they just take it in the beginning in the first 30 to 60 days and they take care of it later. I understand if you need to get it right away just as a security until you get proper life insurance in place. I understand that, no problem. What I'm against is holding it for life,
I see.
right?
I agree.
That is I may step on some people's shoes, but that is the fact. I cannot do anything but state the facts on this podcast, right? Um
So I have one reverse logic question. So does it mean if you already have life insurance with the coverage that covers your mortgage,
right.
doesn't matter if you have 20, less than 20, or more than 20%, does that mean that you don't need to accept that mortgage insurance at all upfront?
Absolutely, absolutely. One of the things I say to my clients is, hey, if you have $1 million of mortgage,
Mm-hmm.
$1 million of life insurance, and your mortgage is 750,000, you
Mm-hmm.
have enough insurance to cover the balance of your mortgage. God forbid you die prematurely.
Mm-hmm.
and you have additional funding for your family, education needs, final expense needs, replacement of income for your spouse for a couple of years, all that stuff is taken care of, right?
I see.
I go on a simple factor. It's called DIME, DIME, Alex.
Mm-hmm.
DIME means to covering your debts, your immediate liabilities.
Mm-hmm.
I is replacement of your income. M is covering the mortgage. And
Mm-hmm.
E is covering education costs for your children if you have little dependent children.
Very nice. Very nice to
Dime. It's
remember.
a
Keep in
dime
mind.
factor, right? And
Excellent.
now if you look at mortgage insurance, it only covers one aspect, which is the M, the mortgage. It
Yes.
doesn't cover the I and the E. Well,
Yes, of
sorry to put
course.
it that way. It doesn't
Yes,
cover
you're
the
right.
entire dime, right?
I see. I hope now
So
people have pretty good understanding purpose of mortgage insurance and how that
yeah,
can affect them if they have or they don't have life insurance, they have
yeah,
or they
yeah.
don't have more or less of 20% down payment,
Right, right,
right?
right. Absolutely, absolutely, absolutely. So that is why when we sit with people, we do a total plan for them, a financial needs analysis. We figure out what's your family coverage going to be, what riders you're going to need on your policy. God forbid you become terminally ill. The
Mm-hmm.
length of your policy, how long you need coverage for. Do you need coverage for life, or do you need coverage for just 20 years or 25 years until you pay this mortgage off? And
Mm-hmm.
what face amount you actually need, right? So these are the couple of things that we bear in mind. These are the key considerations when you're shopping for insurance, right?
Mm-hmm.
Um, so am I good there, Alex? Can we go into the basics
Yes,
of
please.
mortgage insurance?
Yes,
So
please.
what I'll do, just for the benefit of everyone that's looking at this podcast, I'll share a couple of slides, which actually I find really powerful information.
Mm-hmm.
Just gonna get this on a full screen basis. 1 second. Okay. Okay, 1 second. Okay. Are you seeing it right now? Can you?
Perfect.
Okay, good, good. So, guys, let's cover the basics. And Alex, feel free to let's conversate about this. Let's interject me when
Mm-hmm.
whenever you want. Um, First basic point is mortgage insurance is sold by mortgage lenders. Okay, so this would be your typical bank. Okay.
Yes.
Number two is your debt benefit, which is the benefit that will be paid off after someone passes away, which is the balance of the mortgage. It goes directly to the lender, doesn't go to your loved ones, your family. Okay. Third point is as you pay your mortgage, obviously the amount of your mortgage decreases, right?
Mm-hmm.
Unless you refinance over time. But let's say, generally speaking, your mortgage decreases. Did you know that your payment actually stays the same while the benefit is decreasing?
Yeah, I know. But now
Right?
you triggered one question for the bullet point two. You mentioned that balance of mortgage will be paid,
Right?
right? So let's create this scenario. I had $500,000 mortgage, and after 15 years, my mortgage balance
Yeah.
is $300,000, right?
Right. Right.
So what
Right.
is and the bank will be paid for $300,000. What's going on with this balance of 200 I was paying? Because I initially start with 500, right? From five
Absolutely.
to three, we have 200. Where this $200,000 stands?
So let's take a scenario to answer that question. I'll use a real life scenario because I have so many. My
Mm-hmm.
client I mentioned about in the beginning of our call, when they opened up their mortgage, it was about 500,000. Okay.
Mm-hmm.
They were paying $324 a month because of age, for 500,000. When I revisited with them, their mortgage was still around the $420,000 mark. Okay.
Mm-hmm.
But the payment never changed.
Yeah, of course.
As a matter of fact, I don't know for sure, but we have to double check from way back. I think
Mm-hmm.
it must have gone up because when you renew your mortgage, you get older, don't you?
Mm-hmm. Of course.
Right? So if you get older, they reassess you based on your age at that time.
So this $324 will be higher.
Most likely, in some cases, would be higher. But let's say, give it the benefit of the doubt that it stays level. Let's say that you have a level premium.
Mm-hmm.
Why is my benefit that will be paid out in the end Why is that benefit going down? Because the mortgage insurance is tied to the balance of your mortgage.
Mm-hmm.
Okay? That's exactly what happens. And eventually the policy ends when the mortgage is paid off. So if I pay off my mortgage in 15 years or 20 years, I have no more insurance because my mortgage is paid off. Do I have other insurance? Maybe I have a work policy, a group policy, they call it. Group coverage
Mm-hmm.
is usually for maybe 1 year or 2 years of your salary, depending on how much supplemental coverage you buy when you're on the job. But generally
Mm-hmm.
speaking, when you're out of the job or you get let go from that job, that coverage is gone unless you converted it within a certain period of time.
Mm-hmm.
So now
I
you're left
see.
with no insurance and you're 20 years or 15 years older. God knows if you're insurable at that time. I don't know. Health changes, everything changes, right? Um, so that is such a key point, Alex. And in today's society, you see a lot of folks say, well, I don't want to stick to ABC Bank. I want to go to XYZ Bank when I'm renewing. So
Mm-hmm.
what happens now? I'm renewing or I'm refinancing and I move over to XYZ Bank. Can I port my mortgage insurance over?
No.
Generally speaking, you cannot. Now, if you're uninsurable at that time, diabetes, maybe some bit of cancer, maybe heart disease, whatever the case is, over that 5 year period you've been with your previous lender, there is a high risk of you being declined for insurance. Now you're not protected at all. Now your mortgage is not covered, your family is not covered. Now you gotta better build some wealth, better start saving money.
Yeah,
So
I agree.
the good thing is with Primerica, we show people that you don't have to end up house rich and cash poor. Because a lot of people, when they pay their mortgage off, they have no money because all the money was going towards a mortgage. We teach them from the very beginning how to build investments to take care of you in the later years. So if you lived very long, you don't have more month than money. You have more resources.
Yeah,
Making
that's a good
sense,
point.
right?
Absolutely, I agree with you.
Absolutely, right. So, have you ever come across a few cases, Alex, where on my last point there, where the client had the mortgage insurance, but they're renewing with another company and they couldn't port it over? Have you ever on your
Yeah,
own
yeah,
client?
it has
Yeah,
happened.
yeah,
It has happened a
yeah.
couple of times. I agree with you. I'm aware of that. But in most
All right,
cases,
very
people are
good.
not aware of that. So now we are talking that you will be declined for mortgage insurance. We are not talking about the mortgage declining. We are talking about declining for the mortgage insurance if you are trying to switch from one lender to another lender. So keep focus on the title on the top of the screen.
Yes, yes, sir. And you know what? This is such a huge topic because I think in Canada, the Canadian dream is home ownership and business ownership, and most people today they're either saving towards a home or they already own a home, right?
Yeah,
Most families, right? Most
absolutely.
families that I work with, you're either a homeowner or a potential homeowner.
Yeah, I
So
agree.
this is a very, very important point. Now, I have 1 second. I think I have yes. So this is okay, I just want to make sure I cover all the key points.
Yeah.
So this is the key thing, guys. Most I met a lot of folks where they say, well, my mortgage is covered. I'm gonna get, this big check. God forbid
Hmm.
something happens. Well, for your info, FYI, it does not go to your family. It goes to pay off your mortgage. Okay.
I agree.
Okay.
Yeah,
Now,
absolutely.
this next slide, Alex, will demonstrate what we were talking about. So you start out so the blue is a term insurance policy, which is actual life insurance, and then we have at the bottom we have the mortgage insurance, which as you can see, it's a decreasing. So if I may use my pen on that, yes, I can use
Hmm.
my pen. So guys, here is your mortgage insurance. What happens as you pay your mortgage, the balance goes further down. So God forbid something happens here to John and Mary or John or Mary, guess what happens? They only pay the balance of that policy at the time. So let's say it's 150K at that time. That's what will be paid off, not the
Yeah.
$500,000 upstairs, not the one that you bought, what you have left. That's what's going to be paid off. As opposed to actual term life insurance, guess what happens? You can buy a level term policy for 20 years, 25 years, 30, 35 years, whatever the period that's appropriate. You could buy a level term for a level cost. You don't have to look at increasing premiums every 5 years or every 10 years, right? Like this, right? You can
Yeah.
actually pay a level cost. So, see, in this case, the mortgage insurance, it shows the premiums here, one level premium, or sometimes it goes up at renewal,
Yeah.
but then your mortgage is actually going down. Why
Absolutely.
not have something like this one where you you have a level cost and a level benefit that will be paid out to your family. And now your family calls the shots on what to do. If they want to pay off the mortgage or they want to pay the final expenses first, they want to pay off some high consumer debts. Maybe the car loan is killing them. Maybe that credit card with 19.99% interest is in their face every month, right? Isn't that so, Alex?
Absolutely.
Maybe they want to take care of that first and then take care of the mortgage on a monthly basis. See,
Absolutely.
if after paying off all your immediate debts, you have a $300,000 left over in your investment, guess what? If the markets only give you 8%, that's $24,000 a year. You can still pay an average mortgage, say for 400,000 or 500,000, maybe with 2,400,000. I mean, the math is going to be a little bit off here, maybe a little varies, but investments
Yeah.
most of our mutual funds in the last 10 years have earned our clients 8-9% returns on average, depending on markets and stuff like that. But on average, if you can make 8-9%, you're anywhere between 20 something to $30,000 a year in income, which you could use to pay the mortgage. So
Absolutely. You're right.
you don't have to go to your bank and give them the entire check. You don't have to go take $500,000 to the bank and clean your mortgage off because you may be on a fixed rate, you may have a penalty and all that. Why do that? Just have a strategy, have a proper investment strategy and an income replacement strategy.
I agree.
Makes
Absolutely.
sense?
This is what
Makes
we
sense,
are
right?
mostly lacking. We don't know proper approach and how to
Right.
approach to that situation like this one, right?
Absolutely,
So,
my friend.
Mahendra, when we discussed at the very beginning, you told that you noticed on that meeting with your client that she's paying in that mortgage, incorporated mortgage insurance of $324.
Yeah.
So, can you share information where our spectators of this podcast and this video can find that information on their own?
Man, I'm so glad you asked that question because when I asked my client, so we were doing an annual review. This is how this came up. I always do an annual review for my life and investment clients. And I asked her, so what's the balance on the mortgage? And she went all over that matter and said, man, we're struggling. I think we can't afford it. I'm like, what do you mean you can't afford it? How much are you paying? So when she told me what she was paying for her mortgage, in my calculations, it didn't add up. So I asked her, do you mind bringing your mortgage statement for 2021? So she brought her 2021 mortgage statement, and right on the front of that statement it says mortgage protector.
Oh.
Mortgage protector. So there it has the biweekly payment. Biweekly, Alex, it was about I think 170 something dollars, 160, $170 biweekly within that payment. So I showed her, look, this is what you're paying additional for what? Mortgage insurance. She has $650,000 coverage with us at Primerica, and her mortgage is under $500,000. So she has adequate coverage. She didn't need to pay for this mortgage insurance $320 something a month.
So actually, that money can be used either for some investments or to put in some education funds, or even to extend mortgage life insurance if you need, or to manage increasing your mortgage payments because mortgage rates are increasing, right?
You covered it all there. That's exactly. In her case, it's kind of unfortunate we weren't able to put that to work in their investments because the mortgage rates went up drastically. Right, we had over 6 increases. She just needed that money to sit there to pay for the additional cost of her mortgage, right?
Now I have another question, Mahendra. I will be full of questions. Because I'm pretty sure people will ask that question too. If I would like to cancel my mortgage insurance, will I pay any penalties to bank for cancellation or not? And if I had to pay, how much it will be? Any idea?
Sure. Sure. I help clients all the time. We either write a letter and fax it to the bank, but the most effective way is to actually go into the bank, and most banks have a form that they give you that I hereby agree I'm canceling blah 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 blah. So they have their little disclosures and stuff. But to answer your question directly, there's no cancellation fees. Unlike auto, home insurance, there's no cancellation fee for your mortgage insurance. None.
Okay.
None whatsoever. Yeah. Yeah.
So what tools bank will try to use to convince you to come back to mortgage insurance and not to cancel mortgage insurance? Any idea?
Yeah, sure. I've had a client that he went into Richer Than You Think Bank. Can't say the name. So what they did was they actually sat with him, and he had me on the phone because he didn't know what to do and I was busy. So he had me on the phone. He authorized me to speak with the agent, and he left me on speaker. The agent was actually trying to convince him that the mortgage insurance is very good. And he was trying to sell him on the idea that you don't have to worry about your mortgage. God forbid you pass away. We're going to pay this entire mortgage off, right? One thing I asked him was to ask the advisor in the bank to pull up the sheet that you would have signed at the time of taking the mortgage and take a look at all the questions that you answered. Was it all no? He says, yes, sir. They were all no, no, no. And the questions were very limited, just about 5 or 6 questions in this case, okay? And I asked him, do you remember how many questions we asked you when we were doing your medical for term life insurance? And then he's like, yeah, I got it. I got it. So long story short, guys, mortgage insurance is a post-underwriting type of product where they assess you at the time of death. Proper actual life insurance or term life insurance it's pre-underwritten. So you have to qualify for it before you even hold that policy. Yeah. That's the big difference. So insurance companies, banks especially, or lenders will try their best for you to hold the mortgage insurance because, listen, there's one particular bank, I wouldn't mention their name, it's 2 letters, that they made in a year over $1 billion in mortgage insurance premium. Imagine they made over $1 billion for mortgage insurance. Why would they want you not to take that policy? Why wouldn't they want you? Why? It's $1 billion industry.
Yeah.
Right? So I think a lot of it has to do with economics and politics here. That's why people need to come on board and see how money works. I don't care if you become my client. If you're looking at this podcast, friends, I don't care if you become my client. I don't care if you work for our team. Guess what? Get yourself educated. Don't fall for all of these kind of traps. There's a lot of products out there that are traps, literally financial traps. Avoid them if you can.
I agree.
Alex?
Do your homework.
Do your homework. Absolutely.
Absolutely.
And feel free to reach out to myself or Alex. We will sit with you one-on-one and we will walk you through that process. Yeah.
Absolutely. Absolutely.
Alex?
Yeah.
Hope that answers the question.
Absolutely. Absolutely.
Right. So go ahead if you have another question.
You covered actually everything pretty good and in details, and you addressed some concerns and something that people have to think over. Of course, you will always have somebody who will be on that side that they will go by the way they're already there.
Yeah.
But definitely, I encourage people, educate yourself, do your due diligence, discuss with other financial, advisors and life insurance advisors, and then make proper decision. Absolutely. What is your course of action? And of course, they would like to have more details about this and other stuff. They can always come again and listen to this recording and all other recordings we will do in the future, right?
Absolutely, Alex. Absolutely.
And I would like
Alex,
just to share with people, because this is for the very end. Our plan is to have weekly podcasts, which will be focused on this kind of financial education part. And if you have any questions that you would like to address, or you would like to know a little bit more about some specific topic, you can address that question to us, and we will do our best to do that recording according to your preferable topic.
Absolutely, absolutely, Alex. And if I may just say one last closing point here, in our next podcast, what I would like to do is to take a deep dive into, if you're not going to go with mortgage insurance, what's the best product that best suits your needs, and what are some of the features to look for in a policy? And I have them up here on my screen. These are some of the best features that you can have in a policy. So other than just having a payout in case of death, what about disability? What about having your coverage increasing? What about the terminal illness? What if, God forbid, there's a terminal illness? Is your policy covering you for that? What about in the case of a war, right? And what about your children? So we need to look at all of these type of benefits as part of our life insurance policy. So we'll take a deeper dive into that in our next podcast.
It looks amazing. I'm looking forward to hear and learn a little bit more.
Absolutely. Can't wait for that. And I must thank you again for your time and allowing me your space, to share with everyone. And we were open to comments, likes, responses, questions. Feel free to reach out to us.
Thank you,
Alex.
Mahendra, very much for your time today. And looking forward to seeing you next Thursday Wednesday with amazing topics. Thank you for your time today. I wish everything the best.
Thank you, everyone. Have a successful day.
Bye-bye.